Today's turning into a little bit of a comeback story for McDonald's after a multi-month downtrend. Shares of the consumer stock are up big. The staple business seeing growth around the world. Joining us, Brian Szytel is a co-CIO at the Bahnsen Group and, as I understand it, a longtime McDonald's owner of shares. Brian, thanks for being here this morning.
Thanks for having me.
You guys been in Mickey D's for a while, is that right?
We have. I mean, the original purchase was back right after the financial crisis in 2009. So we've owned the stock for a very long time. Pleased with the results today. You know, they suffered an E. coli outbreak earlier in the quarter that affected U.S. Sales, but international sales were strong.
The international part we're talking about this morning, Japan, some other areas looking pretty good. How much do those menus look like the home court menus? Like, is it just purely an E. coli thing? We had it here, they didn't have it there, so their numbers went up? Or is it like I don't know, something else going on over there?
No, it's mainly the E. coli thing. There was also some inclement weather in the U.S. as well. So those things affect the numbers. And the rally that we're having today, about 5%, I think is just some relief in what, what the fear was behind what that could have been. But overall, U.S. sales were a little bit lower. International held in just fine. Same store sales were up internationally. Those things are good. As far as your question on the menus, they're very similar. They're not identical. They cater to each different market. But I don't think that was the driver. It was more the anomaly, I think, with the E. coli.
So tell me about what's possible, you think, stock-wise here, given that McDonald's was at almost $320 before that incident. Shares now kind of closing the gap a little bit. Does that mean we're on pace to potentially breaking out again?
Well, I mean, the stock's up almost 10% here the last 3 weeks, so it's obviously moving in the right direction. I mean, we're dividend growth investors, so we're looking at this from an increase in cash flows that they're going to pay out to shareholders here over the next year. We're very positive on the name, as we have been. It's been paying a dividend since the year I was born, essentially in the mid 70s. And so that's why we own the name. And from that perspective, I would consider it a good buy there. As far as a trade goes, whether it goes from 308 to 325. By the end of the year is a little less important to us. I suspect that the momentum is behind it for all those other reasons. The dividend, by the way, they're only paying out about half of what free cash flow is. So there's plenty of upside for them to increase those payouts over time. And with increasing dividends comes, an increase in share price. That's
kind of what I was thinking. I'm glad you mentioned that because the dividend right now is at like 2.3%, if I got my numbers right. But it has been growing over the last 5 years. What do you think that they're willing to pay out? Where might that go?
It was from a dividend per share or just from a growth rate? I mean, I think if you're paying out only half of free cash flow and free cash flow will go up over time, over the next 12 months, then I think they have a lot of ammunition to raise that dividend, call it high single digits over the next 12 months. At a 230 or 240 yield, while that's, lower than some treasury bonds or things, it's still double what the S&P 500 is. And you're getting a really quality name trading at a market multiple. I think it's a little undervalued.
Do they have any concerns about input prices, any inflationary forces? Of course, we're thinking about tariffs, all that stuff, but does that any of that hit them?
It does. I mean, it affects everything. When you think about the price of eggs or, some of these anomalies that have happened, those things flow through. The strategy of the company is to use more of the McValue platform. So it's going to be more value oriented. They're going to roll out a lot more chicken with strips and tenders and things. And that's from an input cost perspective, chicken costs about half as much as something like beef. So the way that they're offsetting lower prices, both on their value menu, but then also inflation coming down, is by using more efficiency with some of the input costs, just like you mentioned.
Growth in America negative, and so the overall top line revenue is basically flat. But I guess with the dividend, you have an alternative there. It's not really, nobody thinks about McDonald's as a growth stock, I don't think really by any means. But do they need to find something to kind of add a little splash into the menu or anything that might be kind of a additive to growth going forward?
Yeah, I mean, I think their platform, what they've done is reduce drive-through wait times by double digits. That's attractive both from the experience standpoint, and then they're driving more customers through their gates to buy products. That's a positive. I think the McValue menu rollout and focus on it is a good thing. Remember, this consumer is very strong, so the ability to spend is there. I think with inflation last couple of years, you've got some more cautious investors, or I'm sorry, consumers out there. But I think that value menu associated with a better customer experience, with less drive-through times, things like this, combination of all that will be positive.
Okay. PE trading at 26, not exactly high by today's standards in the market, but compared to some staples, I guess kind of middle of the road. Starbucks trades at like 35, so I suppose that valuation-wise, it's not exorbitant to own McDonald's here.
No, not for the quality you're getting, for the growth of dividend potential that you're getting. Obviously the stock has moved back up. I was going to say from a value standpoint, it was in the 280s about 3 weeks ago. But even in the low 300s or 310s, I still think there's plenty of value there. Yeah, 26 times earning, is a little higher than I would hope for. But when the market overall is trading at 23, and you look at a forward earnings on McDonald's at around 23, 22, I still think that there's a perfectly attractive entry point here. And I would suspect shares to go higher over the next 12 months.
All right, there it is, brass tacks. Thanks, Brian. Appreciate it very much.
Hey, appreciate it.
Yeah, Brian Szytel, co-CIO at the Bahnsen Group, with the bull case for McD's.